I think
What are you
we
doing?
are. What up, everybody? Spencer and Steve, and this is CRL Chart Request Live, the show where you provide the request, we provide the charts. Am I seeing us live? Yes, I am. Great, awesome. All right, welcome to the show, Steve. We got some requests. Should we get right to it?
Yep.
All right, let's boogie. In no particular order from the inbox first. Let's start with a question from BZ. Hello there. Can you have a look at what I hope will be a 10-year base breakout for ERJ, Brazilian Aerospace, and then there's more after that. But ERJ. So that's
Embraer.
just the
Yeah.
that's Embraer. Embraer. I don't know how to say that.
Yeah.
Yeah.
Not quite. It's a nice base. Where do you define your risk is a question. If I just VWAP this from the all-time highs from 2007 or above that, I think you really want this one above these pivot highs from what, 2014, 15 though? So that comes in around 40 bucks. Maybe still some work to do depending on your time frame. You do have a pretty clean and clear level of interest here. Looks like price is reclaiming now around 28.50. So I think it's a trade from 28.50 to 39.40. And then from there, I think we like it a lot more. Once we're above 40, I think you could treat this as a little blow off high. Pre-financial crisis, right? Draw right through it. I would use the 39.40 level as the base breakout level. Like I said, you could trade it from the 2018 highs back to the 2013-14 highs. But above 40, I think we like it a lot more. Then we'll be fibbing it out. And the reason for this, right? Reason for why I'm drawing through the 2007 high is because we have so many touches at this horizontal level, right? 2001, 2013, 2014. I think 40 is really the level. You could ignore the 2007 highs and you can fib it out this way. All right, so that'll give you a target around 64. But again, let's get to and through 40 first in the ERJ.
Real fast, Steve, can you just throw on a watermark so we can see?
Somebody
guys
keep
hate them,
changing my
but
settings, Spencer.
just temporarily.
You
Temporarily.
know?
All good. All right. Moving right along. Let's see. Daniel, I'm interested in support levels for ALB for a bounce.
What's left of it, right?
Yeah. From $334 to $77 in a year and 3/4 almost.
Okay, so here's the situation. Lithium and Albemarle and rare earth metals as a group are uninvestable right now. I
Wow.
think that changes in the future, right? But it's hard to find charts that look as bad as they do in this subsector right now. Albemarle's the industry leader. They're the big lithium name. And like Spencer said, something's from 335 down into the 70s. That's not a falling knife that we want to jump in and try and catch. So in terms of support levels, look, we had this one on our radar. This coil was popping up on our radar for breakout multiplier just a few weeks ago. Problem with this coil is that when the primary trend is lower, you want to err in the direction of it and assume that the coils will break to the downside, not the upside. And that's exactly what happened, right? So this one popped up. It had earnings right here. It had a big reversal candle on earnings where it tried to explore the upper bounds of the range, right? See it right here, this red candle right there on August 1st. Tried to explore the upper bounds of the range, then closed red on the day. Follow through the next day, bang, bang, bang. Follow through to the downside. So this one is still literally very much a falling knife. The kind of chart that you want to run from. I will give you some support levels. Who knows if they come into play or not. You have the COVID lows. That comes in around 49. And then below there, 42, call it, the 2016 lows. But that's where we're headed. This chart is a disaster.
I mean, yeah, no arguments for me.
I'll even here. I'll give you one more. Look, you got a situation here too, right? So if this holds and you're dying to get into this stock right now, maybe start building a position. Look, 2011 highs, 2012, 2014, big level of interest right here at the current price, 71.50. So can this form a resistance turn into support here? I don't know. But you can pay attention to that level too. If that breaks, look out for the COVID lows or even the 2015 lows. And I just want to, Spencer, you know, first of all, we don't love trend lines, but boy, you want something like that to hold. A long-term forever trend line, when those break, it's usually like the first technical characteristic you get of some sort of a structural reversal. You want to see this this is a 25-year trend line.
I mean,
You want to see that
structural reversal. It's 330 to 70, but all right.
That's my point. That's my point. So a structural reversal can occur in a 70% drawdown. That would be, we'd be talking about another 70% drawdown from there, back into the teens, right? So I hear you. It sounds crazy, but I'm talking about the structural trend here, not even the primary trend. Primary trend broke a long time ago. And then this chart, I knew what this looked like because we were looking at it the other day. Albemarle SPY, this is ALB relative to the broader market. You couldn't have a cleaner level here, right? So this is the zone where we want to be long, a name like Albemarle. And this is the zone down here where we don't want to be long, maybe even short Albemarle, right? So this level broke. We're back into this box, right? We haven't seen these levels on relative terms since 2005. I don't have much good things to say about this one. That's a massive top. I mean, look at this top, Spencer, right? You know, like you see it, right? You see this? This is as bad as it gets.
Not great. Not great. All right, trend. Keep the obscure, and not that Albemarle is obscure, but keep the obscure tickers coming. This is a new one for me. PHI. This is from, who asked about this? Nick. Oh, Filipino Telecom. Never heard of it. I'm sure you have.
Yeah. Okay. You know, every country around the world has some telecom giant, right, that services their country or their region. Or some countries have a number of them. And they're usually bad charts, just like the telecom giants here in the US. Talking about you, AT&T and Verizon. They're typically what we call secular laggards. They're typically charts that we never buy. So let's start there for some context. This is one of them. This looks like those. So here you go. Some semblance of a base trying to form. Not even close yet. Call it a breakout level around 38.50. I could anchor some VWAPs and try to like this more. No, not even. If I drop a VWAP from this 2002 .com bubble bottom, we're below it. Sellers are in control on just about every time frame on this one. So I think a lot of work to do. A lot of work to do. There better be a huge yield. Let's see.
I don't know.
We got a 4.34% dividend. So at least there's that. But I think even if I were to draw you some lines here tactically, I'd be doing a disservice because there's really nothing to be excited about except for the fact that it is above the spring 2022 high VWAP. So maybe something there. But we got another VWAP to get through here. And then the base breakout level, which is 10 points higher. So I don't think there's really anything to do here. And then Spencer, so I could illustrate my point about how bad these international telcos tend to be, let's just look at it on a relative basis, right? Is this something that you want to put in your portfolio? It's trading just off of all-time lows relative to the broader market. So if I'm tilted bullish in something like this, I'll go like this and I'll say, hey, look, what a logical level, right? For this underperformance, the secular underperformance to end, right? And the stock to maybe start leading, right? But that's kind of more of a hope trade than anything. There's really no evidence here that this relative trend is turning. This is like catching a falling knife too, like the Albemarle absolute chart. Yes, it is testing the .com bubble lows relative to the broader market, but it's also in a 15-year nasty structural downtrend relative to the broader market. So not the kind of stock that we want to get behind.
Although I might also say why compare a Filipino telecom company to the S&P 500?
Good question. It's a good question. Let me tell you why. I want to benchmark the things that I might buy against the average thing I would otherwise be in. For me and for most people, that's SPY. Sometimes I'll benchmark it against the Qs. I have heavy tech mega cap growth exposure in my long cap account, so that is my investment alternative. the Qs, the SPY, right? Another stock in the S&P 500 or the S&P 500 itself, I'm benchmarking against that because if I'm not buying something like PHI, I'm buying a stock that should resemble the broader market or the NASDAQ 100, the S&P 500.
Okay. All right, let's wrap up the requests from the inbox. A lot of international flavor today. We started off with a Brazilian aerospace company. We talked about a Filipino telecom company. Now we're going back to Brazil. SBS from Jonathan. This is Brazilian.
Brazilian trash.
This is a Brazilian utility, I think.
I think it's Brazilian trash, isn't it?
Yeah, well, utility, yeah, trash. I think you're right.
Yeah, they call it water utility. That's sanitation. Water and sewage. Yeah. Sao Paulo, 1973. What a great year. So look, I know Sam likes this one too. When you zoom out, look at this. Fantastic. We're going to do a little exercise in a second. Don't get too excited yet. We have this and we can be long. Call it 1650. Great. The breakout is more or less in the books. Getting some beautiful follow through. This is the daily chart. Breakaway gap at this breakout level from many, many years ago, right? That's where that happened. Fantastic. Love to see that. One would call that a decisive breakout. Similar to the one that we had in the Russell 2000 that failed just a few weeks ago. So SBS now. So, all right, some levels, 1650, call it. If we fib out the base, I think Sam posted the chart on the Twitter a couple days ago. If you want to go see it there, I'm sure he did it the same way. 1650 gets you 2450. We're already on our way. We're at 18 and change. So you're already risking, I don't know, $1.50 or more to the downside, but that is still a good risk reward because you're getting about 6 on the upside. Now, if we look at SBS again, I'm not going to benchmark it to Brazil because if I don't buy this, I'm not going to buy some other Brazilian stock. I'm probably going to buy something that's in the S&P 500. So let's look at SBS versus our investment alternative or our investment benchmark, the S&P 500. Don't look so good anymore, right? So improvement for sure. Maybe I could build out a little bullish story on this relative trend. Say, oh, we're at multi-year highs here. That's at least some improvement after shaking and testing, multi-year lows, right? So that's encouraging. But really, we want our relative trends to look like the absolute trends that we're buying. I want new highs on absolute basis, confirmed by new highs on a relative basis. This one is nothing like that. So the absolute price chart, yeah, go for it. I like it. In terms of leadership, I don't know if you're going to get it.
All right. That was a glass half empty analysis.
Maybe.
Anyway, all right. But let's move on. To the chat we go. What's up, guys? What do we got here? Anything today? Let's look for new ones. What do we got? New names, I should say. CLS. Yeah, I can't talk today. Celestica.
Yep.
By the way, nice cat.
This one keeps popping up on things. I don't know who these guys are. Is this an AI stock? It looks like one.
This is
electronic components AI names.
I don't know what it looks like. Something.
Yeah, supply chain solutions. That can mean anything, Celestica. Okay, so look, nice base. Let's draw it out. Beautiful base, structural base. Right, bang. Base breakout happened a while ago. Right, we would have drawn that like this. Got it in the books. Primary trend is higher. Targets have been hit. We have the 61 right here. I think you lean into that. We got all this price memory from over here during the .com. Slowly working through it. We would expect exactly what we're seeing, right? When we ran in to this cluster of price memory here just a few weeks ago, I would expect some backing and filling, some sloppiness, right? Some digestion taking place. Look at this thing's gone from 10 bucks to 50, 60 bucks over the course of, I don't know, a year. A little more than a year. So let it dance. Due for some consolidation. I think that would be constructive. But if and when this one rebounds higher, which is kind of doing right here, right now, I think you want to lean into this 62% fib. Use that as your level. I think you're getting it today. So 54 and change. Trading at 56 here today, up 7% on the day. Another way to determine if it's time to get long from a shorter term perspective, Drop the VWAP from the pivot highs. We are blasting through that level today in a big way. Earnings is behind us for the quarter. A lot to like here. So yeah, listen, if you're above 54.50, absolutely. I think you get more confirmation when we make a new pivot high or a new cycle high. That'll happen around 63 and a third. And then from there, trade it back to those old all-time highs, 86, 85. It's a beautiful chart. And, you know, it's one of these patterns, Spencer, where, you know, lo and behold, right, a leadership name like this, I wouldn't expect it to be a top, and it wasn't a top, right? I need to see this kind of stuff from Dell, Micron, Supermicro, AMD, all those names. Let's fail these tops, right? That would be a huge development. But the best ones, the strongest cycle leaders, are failing tops and working their way higher. They look a lot like this. Can I share some others, like other AI trade names, failing tops? Here's Vertiv failing a top, right? Look at that.
You just name drop Supermicro. That doesn't, it's got a long way to go, man.
I know. And it's got to get it done. Here's Vista failing a top, right? And Spencer, you're right. Like Supermicro, come on. This is an AI leader. Big move today, 8%. So this can and will happen faster than you think for a name like Supermicro. Super high beta could also be its name.
That's true. That's true.
Right. So like Spencer, this, like, I know you're right. We were down at below 500 the other day. We're 625 today. This could happen tomorrow.
All right.
It's a follow through. But like a name like Supermicro, it's a poster child of this bull market. You can't have those names topping out and rolling over. I think this one is critically important to undo its top.
All right, let's do some stocks that I actually know. BRB 206, that's my Goldman Sachs. So let's look at that.
What did you just say?
Goldman Sachs.
Oh. Yeah, great. You know, again, not a top. The big banks continue to trade far better than the little banks. I think we have to stay there for now. Again, Spencer, you hate this. I will just say it. The banks are an election trade right now. I added a bunch of exposure. I'm not stopping myself out of it. I'm remaining hopeful for this group, but this is an election trade. The way these stocks will perform is dependent heavily, as much as any group of stocks right now, on the outcome of the election. I hate that that's the case, and it makes me not want to own them at all, because that's usually not the game that I'm trying to play. I thought we were in all clear, just a month ago, based on the polls and the betting markets. Things have drastically changed. So the price charts for the banks have also drastically changed. Who will be insulated? In other words, who will be less impacted regardless of who gets elected? The big six, right? The major banks, there's little that's going to go on there. But if they bring out some big deregulation, some big Dodd-Frank rollbacks for the regional banks, that could be huge. So as far as the small banks are concerned, election trade, probably better off waiting. Big banks, they'll be less impacted. They'll probably do better under a Trump presidency than a Kamala presidency, but they're so big, they're so insulated, they're doing 10 different things. It matters less to them. So something like Goldman Sachs, I will give my blessing here. Regional banks, I think you want to be a little bit more careful about. Like I said, I'm not selling the regional bank exposure that I added about a month back, but I'm definitely not adding more like I was planning to. So Goldman, next stop is 517. Really the pivot high, see how well that lines up. We ran right to the first target after we got this beautiful base breakout. And then we got a lot of chop and nastiness there. If we blast to and through 518, call it, next stop 666. JC thinks that's funny because I think it has something to do with the devil, which some people believe Goldman Sachs is associated with. Right? Did I get that right?
Very good.
666.
Very good. We've come full circle. Okay. Here's an interesting one from Nathan. Simon Property Group, SPG. I think I see what Nathan sees here, which is just an obvious level of resistance.
Yeah.
Or new support. I don't know.
Big announcement. REITs are now a part of the Straza IRA.
Hey,
it's never been the case. Never been the case. We are getting long REITs. This is one that I especially like. I think, what's the other one? Boston Properties. Dude, I like the commercial real estate. I really do. You know, what does Warren Buffett say? Buy when others are fearful or whatever. I mean,
that is the thing he says. He says a lot of things, but that's one of them.
This is buy when there's blood in the streets. This is supposed to be the group that tanks the whole market, right? Commercial real estate, CRE. Everybody knows that acronym now because it's been such a scary group. Well, we're waiting for a blow up. It's been years now that they've been telling me that, commercial real estate's going to blow up. I just see primary trend reversals, higher prices, and lately relative strength. The relative strength out of real estate off the charts. Past couple of weeks while everything's selling off, real estate's like, hold my beer. They look fantastic. They keep moving higher. We were talking on our analyst meeting today. Let's anchor performance scripts from the July 16th high, right? And see who's above the July 16th high. That's when the volatility started. That's when the selling really began. That's when the major averages peaked. That's when breadth peaked. Our new high indicators peaked. Guess what? Real estate's blown through their July 16 levels. I think they're the only sector to do it so far. Besides, healthcare is joining that list today. But real estate looks better than anything at the sector level right now. SPG is one of the big boys. They're also going to pay you like 4% or something. Let's see here. They're going to pay you 5% to hang on. Path of least resistance is higher. This is great. Next stop, 175 from there. Prior cycle highs. And that's going to come in. Come on. Come on, TradingView. Come on, TradingView. Come on, TradingView. Okay. Prior cycle highs, that's going to come in around 191. And then after that, about 225. That's where I think we're headed. Back to those old all-time highs.
Terrible.
225. And listen, in something like Simon Property Group, this is low volatility. It's supposed to be quality, at least in its group. Some would argue it's not anymore. But this is a good name. I think this is a great vehicle to use to add exposure to real estate. Look, you got this long-term trend line break. Everything looks good here. I like this one a lot.
Okay, let's go to America's second or third favorite wholesale club, BJ's.
Oh, I love BJ's.
I've never been inside one before, so I don't know.
Oh, come on, get involved. Look, this is not a top. So, nice little base. I'll just say I'm involved in this one, Spencer. I'm going to tell you why. Because I feel like as a long-term buy and hold investor in my IRA, that I missed Costco. I feel as though I missed Costco. I look at that chart, I zoom out, it makes me sad. I've been a long-term customer. My whole family uses it. We're big Costco fans.
I hear that, man.
What a beautiful business. They have basically invented and now run. BJ's follows the Costco model. They're trying to do the same exact thing as Costco. However, their footprint in the United States is nothing like Costco's. BJ's market cap reflects that. This is a $11 billion company. What's Costco, like 200-300 billion at this point?
Costco's in the threes. BJ's is like 11, yeah.
So many multiples higher. What, like 30x the size of something like Costco? Maybe this is the growth play. They're going to follow the same exact playbook as a company like Costco. However, I think that there's a much better growth opportunity. So you had an opportunity right here around 80 to buy this retest. You're getting a bounce off this level today. This is beginning to look like a failed top. I'll tell you how we get confirmation that it indeed is a failed top in a second, right? But definitely starting to take the form of a failed top. Go ahead and drop the VWAP from those range highs. Tested it today. Have pulled back in a big way, right? Maybe we work our way through. That's where you're going to get confirmation, right around this 88 level. All I did was drop an anchored volume weighted average price from the July highs. So I think you could start scaling in, start building a position. And I think this is a great story long-term. BJ's.
Wow.
I think this chart looks more and more like Costco's over the years, right? And like I said, it is a far less mature company than something like Costco. Costco can't grow anywhere anymore, Spencer. They're huge. They're everywhere at this point. The only place Costco is not is where I live. That's the only place
has levers they can pull. They just raised their membership price for the first time since I've been a member. First time in 5 or 6 years.
That's the Netflix thing, though. It's not organic. But it's not organic.
I'm far more likely to quit Netflix than I am quit Costco. At this point, I'm stuck. I can't leave Costco. You know what I mean?
But Spencer, my point is that's a thing that a company that's at a mature growth stage does, right? A young company says, "Oh, we'll just add more Costcos. We'll you know, we'll expand into this region or this area, right? Once you are everywhere already, well, what can you do? You can raise prices, right, to fuel growth. But in terms of expanding into new places, I think, you know, Costco, where else are they going to go? Come down to Key West, Costco. We need you.
All right, well, let's do one more and we'll hop out. On the conversation, this is interesting. Lazy Beats asking about Blackstone. Really, with the context of the real estate conversation we just had, it
A lot of real
could
estate.
be an interesting way to play real estate.
Interesting, yes, but it's not wrong. That the right idea. I've been saying, you know, Spencer, we've been talking about this. I've been saying the asset managers have become, depending on what you want,
they are freaking everything.
Massive exposure to commercial real estate, some more than others. Just go pull up the 10Ks, pull up the annual reports. They will literally outline exactly how much exposure they have to commercial real estate versus other investments. And if that's the trade that you're trying to make, honestly, I'd rather let one of these asset managers, you know, these guys have been around forever. They're really good at making money, returning value to shareholders. I'd rather be in an asset manager that's, you know, levered to real estate than a REIT. I think they are better stewards of capital. These guys have proven that they're excellent stewards of capital over the years. So I think this makes a lot of sense if you're looking for a real estate play. Again, I don't know exactly how much. I could actually pull it up. We don't really have the time for it. I don't know exactly how much exposure that they have to real estate. I do own a little bit of Blackstone. I own a little bit of Carlyle Group. I own a little bit of KKR. I like the asset manager trade. I think for Blackstone at this point, I mean, this level's got to hold. This was the range resolution that we got. You know, you got a false start, a little shake, and then a go, right? So 134 is a level, but from there, really, let's see it get to and through 150. And then the next stop from there would be 197. I think Blackstone can make an argument to be added to the S&P 500. They just added KKR last round. I think Blackstone is probably on that short list to be added next, with names like Palantir and Coinbase and some other stocks that we like a lot. So that could be a catalyst. I think Blackstone is, you know, best of breed in this industry with a handful of other names. And let's just look at the relative trend to kind of illustrate that fact. So we like it a lot more above 150 rather than the range highs. But if you look at the relative trend, you got a beautiful trend reversal shaping up here as well, right? If I had a 200-day moving average, you'd see it curling higher beneath price. But this is the kind of relative trend that we're interested in, right? Stair-stepping higher over the years, big consolidation over the past several years. Looks like it's ready to go again. Assume a new leadership role. I like Blackstone. I think financials are a place that we want to be fishing for long opportunities. Blackstone checks that box.
I'll be honest, I did not realize that Blackstone was not in the S&P. So today I learned something.
So first asset manager was just added. KKR was the first one.
All right.
Yeah.
All right. That'll be a place to wrap. We'll be back on Tuesday. Patrick will be here. And as usual, send your requests to the inbox, questions at stockmarketmedia.com, or just reserve them from the chat. That works too. And smash the like, please and thank you. Thanks for the questions. Steve, good job. We'll see you guys later.
Thanks for joining, everybody.